Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and president of InkResearch.ca. He invented the mid-cap-oriented Inc. Canadian Insider Index, which is used by the Horizons Canada Insider Index ETF, a 2017 Fund Data Fund Grade A award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back on a news-filled Thursday.
Right now, the G7 finance ministers are huddled up in beautiful Whistler. What do you think they're talking about today?
Well, I'm sure they're talking about, the peak-to-peak gondola experience and, when they get to go for their break and up the mountain. No, I'm just joking. I mean, clearly they're going to be talking about the U.S.'s war on its allies, trade war on its allies, and given that it's the Treasury officials meeting, not the trade officials, I don't expect a lot to be accomplished on that file at that meeting, but it will certainly set the tone for some rather unfriendly chit-chat, that's for sure.
Yes, can they keep to, as they say, diplomatic language? Well, Canada is the U.S.'s biggest supplier of aluminum, also its biggest single supplier of steel, and both Canada and Mexico slapped with tariffs on their steel. The U.S. saying you didn't get NAFTA negotiated in time, so you're going to have to pay the same penalties as Europe. Europe has already said it's going to take the U.S. to the World Trade Organization on June 1st over these tariffs, saying there's no reason for them. It's pure protectionism. Is it pure protectionism? And what can little Canada and little Mexico do in comparison to the giant U.S.?
Well, of course, it's protectionism. It's pure, simple protectionism. It's the Trumponomics at work. So that's pretty clear. What can Canada and Mexico do? Well, they can do one of two things. They can do the economic response that makes the most sense, which is basically not to do anything, because you hurt yourself when you impose these tariffs typically. But that's the economic response. There, unfortunately, with this trade bully, the trade bully twins, Wilbur Ross and Donald Trump, there's tactical considerations, and one has to be pragmatic. And I expect Canada and Mexico will retaliate, and when Europe retaliates, and I suspect that they've talked to each other, and this is not out of the blue, so there will be a informal but probably coordinated response to target key Republican jurisdictions in the United States, and we will see what happens.
Well, at the time of our interview, Mexico's already announced that it's going to put tariffs on U.S. cheese, pork, lamps, apples, and blueberries.
No, the pork farmers are right in the middle of this, aren't they? I mean, this is all about it's supposed to be about steel and aluminum and what have you, but both the Chinese and now the Mexicans have pork in their sights. So, I mean, for one, I guess the silver lining for American consumers, Jim, is that while the price of homes is going up due to softwood lumber tariffs, and while the price of beer will be going up, as the price of the aluminum goes up and other canned goods, I guess the price of pork will be going down, so they can stock up on that.
Well, bacon will become more popular than ever.
It will. They'll be able to substitute that for I don't know what. They'll be able to substitute it for. Well, they'll be able to substitute it, I guess, for another 2x4 in their house or something. I don't know. Those are the choices that Donald Trump is making on behalf of the American people, and I wish them well.
Yes, and U.S. pork producers, along with Canadian, when we put sanctions on Russia a few years ago, they took a $3 billion hit. And that's one of the reasons why bacon is now on everything here, because they had to find a new market.
Right. Well, that's a good point, and I suspect the bacon will be the new in thing in the United States. That's for sure. Certainly at the family restaurants, you'll be having bacon days.
So with the Canadian markets, what can Canadians do who are invested in the TSX and so on do?
Well, the first thing we talk about in the show often is that not to confuse the Canadian market with the Canadian economy. There is some correlation, of course, but for the most part, the Canadian economy is really focused on what's happening in the world. Now, this trade stuff is not great for the world economy, but it doesn't show any signs of slowing down. And I think that means that Canadians who are investing, if they want to be invested in the stock market, the Canadian market is still a decent place to be given where we are in the cycle. Now, what I mean by the cycle, I mean the fact that we've had a really long expansion since 2009, and as that expansion gets older, inflationary pressures start to build on their own. Never mind when Mr. Trump is out pushing up prices through tariff policies. So when you look at what's happened in the lumber stocks, have had a really nice rally here over the last year after tariffs were introduced in the United States. I wouldn't get too down on the Canadian market just because of some gloomy headlines, and we had a GDP that came in under expectations. But look, that's a domestic issue. But for the Canadian stock market, it's actually done quite well over the past year. Jim, you tune in the mainstream media and you hear nothing but doom and gloom about the Canadian market, but I'll tell you, over the past year, our Canadian Insider Index, which is more or less a mid-cap focused index, it's had a very good run in relation to the American market. I mean, over the past year, the Canadian Insider Index, as of Wednesday, was up about 11% before dividends. Now, you could say, okay, well, that's great, but the S&P was up even more. The S&P was up about 13%. However, the loonie over that period is up about 4%. So actually, as a Canadian investor, you could have done better in Canada over that past year. But you don't hear the mainstream media talk about that. It's much better to talk about gloom and problems and all the problems we have. And we do have our share of problems. I'm not trying to gloss over that, but let's keep in mind where we are in the global economic cycle, and typically it's a good time to be in the Canadian market, and don't get too overwhelmed by the news about Italy and Spain. These stories come and go. Unless you're having a major systematic problem, and we don't see that really. We've seen a few emerging markets have some issues, but we haven't seen any major financial institution really kind of show any signs of stress that we haven't known about. And I'm talking specifically about Deutsche Bank in Germany, which I think the stock is trading at multi-year lows, I believe. But that's pretty much understood in the market. So not a lot of surprises out there except for what Trump hands us from day to day, tweet to tweet. But at this point, I think the case for the Canadian market relative to other markets is still pretty good. Yes, but it would be much better if we had NAFTA solved and Trump wasn't out kind of on this trade war that he's really starting here with all his friends.
We'll have more with Ted Dixon right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're chatting with Ted Dixon. Ted, the federal government is going to take over the Kinder Morgan pipeline project. Is that a good deal or something that just had to be done?
Well, Jim, all I can say, it's kind of like, the Kinder Morgan Trans Mountain Pipeline expansion. I guess we could call it Mr. Tube Steak. It just hasn't been very pretty watching this thing being built and made, but it looks like we're finally going to get it delivered on a bun. May not be for another year or so, but that's about all you can say in terms of anything positive in what's happened here. The rest has just been a major mess. Let's just leave it at that.
Well, BC still insisting it can regulate what flows now through a federally owned pipeline. How is that possible?
Well, sure, if the courts want to totally upend trade, interprovincial trade in this country, then we're in for a whole new era. Then I would be very concerned about the Canadian economy, the Canadian market. I would just be so out of Canada if the courts give BC the right to strangle interprovincial trade based off of very kind of nebulous rules and self-serving rules. I mean, I just cannot believe the courts are going to give them that. But I think crazier things have happened. We see it every day.
Yes. So far, though, I think 16 court rulings have gone against the pipeline protesters.
Absolutely. So I'd be very surprised if the Horgan stunt succeeds. I think I've always believed he's doing it because he has to keep the Green Party happy, and he's basically going through the motions. Unfortunately, these motions are very expensive on the rest of Canada now, in the sense that they stalled the project and forced a changeover. I mean, these all have costs, and we're going to be in the ridiculous situation, Jim, where we have one set of taxpayers, BC taxpayers, in court, fighting the federal taxpayers in court. I mean, that's just ridiculous. But there it comes. There's Mr. Tube Steak in the process of being made right there.
We'll have more with Ted Dixon right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, the Bank of Canada says it's going to hike rates at least one more time because it wants to meet inflation targets. Well, right now, the government does not include housing and fuel prices when it comes to inflation. Have they seen what the price of gasoline is in Vancouver? Do you really think we need to hike rates anymore to up inflation?
Oh, well, they would be raising rates to control what they focus on a lot is core inflation, because Mr. Polos, who I believe he gets a car as a Bank of Canada governor. I could be wrong. I don't think he has to worry too much about price of gasoline, and he looks through that. He says, "Oh no, we look through. We don't pay attention to that." So that doesn't that $1.55 a liter, what we're paying here in Vancouver, that doesn't concern him. So I just said, obviously, the high cost of housing has never concerned him either. So, no, they look at their models, and they've now determined, oh boy, maybe we're going to have an inflation problem if we kind of don't get to a realistic level of interest rates. And really, when you think of it, you have inflation at your target. I don't see things getting cheaper Why do you have real interest rates negative? This is very hard for the Bank of Canada to explain with a straight face, and they're basically running out of excuses. Now, it is interesting that the economy kind of slowed down here in the first quarter, the growth, but the problem is that inflation is not slowing down. So what are we getting, Jim? It looks like we're getting a little stagflation. And we talked about that on the other broadcast. So, when you're looking at stagflation in the market, one area you might want to look at are REITs. If you have good REITs that can pass along their pricing power to their tenants, then REITs are often a decent place to go during stagflation. And that looks like a likely scenario for the Canadian economy right now. I mean, I hope not, but we could be getting kind of lame growth, and where inflation is higher than the growth rate.
Well, the latest figures show the Canadian first quarter GDP growth was 1.3%. The estimate was 1.8%. So that is slower than expected. That's
right, and core inflation, what doesn't include the gasoline or housing, is over 2%. So that would, to me, Q1 was a stagflationary quarter. And so perhaps it's not a big surprise that over the last month we've had a fairly decent run in REITs when you look at their yield, and they've also haven't done bad year to date either in terms of the Canadian market. They've been one of the positive performing areas. So that's certainly one area to keep your eye on for investors out there in Canada. If we kind of chug along here in this situation where you've got inflation outpacing real growth.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, President and CEO of InkResearch.ca, his website, CanadianInsider.com. You're listening to the Goddard Report. No, you're not. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. If you have any questions for the show, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.